What's going on, guys? I have a few free stocks to open right off the bat of this video, so let me jump in both in Robinhood and Webull. This first one is from Victor. Victor, thanks for using the referral code. Here we go. I'm going to pick a stock and just scratch it off just like that. Prospect Capital. This is a monthly dividend paying company. $5.11 right there. Just for using my referral code, I got a free stock and they got a free stock as well. Thank you so much for using that code. It really does help out my portfolio. In all transparency, I do end up selling those stocks just to add them back into this portfolio, but let me hop over into Webull and I can show you the two more free stocks that I got from them. So if I click on get right here, you should draw the free stocks within the next 30 days. Now your free bonus is expired. Unfortunately, I don't know what is going on here. Webull pulled the old Uno reverse card. They switched it up on me. You should draw the free stock within 30 days. Now your free stock bonus is expired. So essentially, I'm going to get those two free stocks right there within the next 10 business days. It says right here on the app. So I'm going to go ahead and I'll show that in a future video what I actually pulled from them. So there's a little bit of a tease there, but you know what? Free stocks is free stocks. I'm not going to complain. All right, jumping back into my Robinhood portfolio here, I'm just going to cover the gains that I am seeing so far. So over the past day, we're looking at $7. Past week, this was one of the rougher weeks. I haven't been read for this amount of time in a very long time, but just down to $36. So really not sweating there. Over the past month, we are up $232. 3 months up $660, and over the past year up 303. Made that huge bounce back since the virus and everything going on. So stock market, really interesting stuff going on there. Now in this video, I had a number of different comments on my previous YouTube videos just specifically about diversification, so I wanted to make a quick little note about that. So the first comment here comes from James Galloway, who's basically just saying diversification is key. It's really important to have within your portfolio, and diversification is going to just help you out so much. So James, thank you for that comment, but there was one in particular, another comment here that I wanted to cover. This one comes from I'm Beneficial, who says, just my opinion, you have a lot of stocks. You may be limiting yourself with so many, but definitely a very strong lineup. And yes, I 100% agree with you. I actually went through my stocks. I sold out some positions and picked up more on current positions that I am in. I wanted to basically narrow my net just a little bit more because I agree, I felt like I was really diversified with this portfolio. So they say, yeah, Warren Buffett says it only takes a few winners. Warren Buffett, investing prodigy. I pretty much look up to him as a long-term dividend investor. Everything that he's been able to accomplish has been amazing. But Warren Buffett says it only takes a few winners. I just recently closed some position out. It feels bittersweet, but high conviction on high quality is really rewarding. So thank you for your comments there. It really means a lot to me if you guys are more engaged with the videos. And if you do have any comments about my portfolio, about investing, maybe you have questions, definitely leave them down below. I love answering the questions, and I actually started a new series on the channel, D-Lit's TV Talks, where I answer your specific questions. So definitely consider leaving some of those questions. And if you guys are new to the channel, haven't heard of it before, talk about all things investing with my tips, tricks, and insight into the stock market. If that's something that interests you, you're looking to increase the size of your portfolio, I would highly recommend jumping down, hitting that subscribe button, turning on the bell notification so you can be alerted when new videos come out. I post a ton of different videos. You're definitely not going to want to miss them. Main thing here, Robinhood Challenge, which is what I'm covering in this video. I invest $100 every single week and share with you guys exactly my moves and just talk about it a little bit more so you understand why I'm making these moves. Now, what I'm looking at here, a number of stocks in this portfolio thus far are red on the day, so it might be a pretty good day to get into some of these stocks. One of the main investments I have is SPHD, and I feel like I really want to bulk up this position even more. I know that they have such a high holding, but they're a well-diversified ETF in high dividend, low volatility stocks. So I was planning on actually buying another share today. So I'm going to be buying a limit order here, setting it at the current market price of $33.84 to maximize the money I'm putting in. I'm going to go ahead, pick pick up 1 share of them, swipe up, and just like that, we have added them to the portfolio even more, driving that cost down. You can see my average cost is $36.22. This ETF in particular makes up 24.55% of my portfolio, and we're down under 7% now, trying to pull that number back. That's going to be awesome for the portfolio when we go up from there. Looking at what I'm seeing from dividends from them, you can see my most recent dividend being paid out is $7.11. That is a really solid dividend payment from one particular ETF, and this happens every single month. So if I scroll through my history, you can see the amount of dividends that I'm actually being paid. Love dividends, free money right there. So another one that I want to pick up today that I covered in a previous video is Coca-Cola. And the question that I got before was why I actually invest in Coca-Cola as opposed to investing in Pepsi. And Pepsi is a little bit more diversified with their products. They have a little bit better track record when it comes to investing, but I just see the long-term potential for a company like Coca-Cola to continue. They just recently introduced some spiked seltzers to the market. So this is one that I want to be able to take advantage of going forward as well, one that I'd love to drive that cost. And ultimately, this really just helps out my dividend portfolio even more. Coca-Cola is one of Warren Buffett's biggest holdings. And as I said before, Warren Buffett, the prodigy, pretty much the one that I look up to when it comes to investing. So this particular investment, I'm only down 3.26% now. We are honing back in, trying to make a big comeback, and it's going to be awesome when that's positive. So let's see how much money I have left. $21.30. Now I don't have a lot of cheap stocks in my portfolio, but what I can do is buy a full share of HPQ. That's exactly what I'm going to do right now. This one is interesting. I'm up nearly 4%, a little bit higher. And at times I was up 10-15% on them as they were in talks with Xerox of being bought out. Maybe there is some potential for them to be bought out in the future. I know they were looking to sell, so it could be a solid opportunity for me to get in some more shares here. I'm just going to be getting one, however, which, you know, isn't going to be a huge deal in the short term, but I'm just looking forward to pretty much bolstering up my portfolio. So pretty simple moves this week. I guess it's a little boring since I'm just investing in a lot of these similar stocks. Pretty much done the back end research of these, so I know that these are ones that I'm very comfortable investing in. But like I said, diversification, I sold out on some positions. I still do hold a lot of stocks for a $7,400 portfolio. So I decided to take it upon myself and Google, you know, when are you too diversified? When should you be cutting back on the types of stocks that you're investing in? And I came across this article, which was from CNN Money, which offers some really great insight in my own mind. So this article from CNN Money is titled "How Much Diversification is Too Much?" And that's exactly what it covers. What stuck out to me when I was doing this was reading the check your work section, where it says the most common way to measure if holding 2 or more securities will provide your portfolio with diversification is to look at the correlation between their historical returns. So basically, when you are looking at the historical returns of these stocks, you know, if they line up super similarly, and they're pretty much, I guess they're cannibalizing the types of returns that you could be seeing, that is the opportunity where you're thinking maybe I should be getting out of one of these investments if you're not feeling too confident with them. In my portfolio, where I have a lot of diversification, not only in ETFs and stocks, but industries specifically and different companies, I'm starting to mix in some of those more growth potential stocks. So there's a lot of great diversification coming up, and there's a lot of great diversification already in my portfolio. If I had a larger amount of money going in, I could capitalize more on the returns, but really right now, what I'm looking to do, dollar cost average a lot of those stock prices down, so that way I can capitalize in the future and make the very most money that I can just by putting more into the market. So a lot on diversification here in this video. If you guys did enjoy, please let me know in the comment section down below. If you aren't already subscribed to the channel, consider joining the team. It would really mean a lot to me. And then if you guys did enjoy this video, smash that like button. It really does help with the YouTube algorithm. Thanks so much for checking out this video, guys, and have a great day.